Greetings, guys and gals. Welcome back. Welcome back. Joseph James here, School of Trade, Sideways Markets. It's about that time of day again. Here's your live trade room recap and your trade of the day. Now, this morning we were hot on the trail of crude oil futures this morning. We sold short right at the open, made some money on the open. Went through a small period of consolidation here between 9 and 11 o'clock this morning. Lost sight of who really was in control of the price. And then we actually ended up taking this price higher today into the 60-minute sell zone, and most importantly, a final target of a fib extension. So this morning, right on the trail of crude oil this morning, we began this morning by identifying a few key components. Let me back up real quick. Every evening, 9 p.m. Eastern Time, I'm going to update my daily price levels. Now, every single person, whether you're a trial, beginner, intermediate, or advanced, every single member of mine, whether you're getting a trial or you're a full-time member, you all have the ability to use the daily price levels. So use them. Every morning I go in, search box on the website, grab my daily price levels. These daily price levels are key to our success today, because the daily price levels are going to tell us exactly where the buy and sell zones are. If you've been watching our videos recently, you probably know by now. Find the sell zones and sell in the sell zone. Find the buy zones and buy in the buy zones. It's really, really easy. So don't forget, if you're a trial member, beginner, intermediate, or advanced, everybody has access to our daily price levels. Now this morning what happened, we came in at 8 o'clock. At 8 a.m. Eastern Time, like we always do, we're going to go to sidewaysmarkets.com, and every morning I have a formal morning prep. I spend a lot of time on this each morning to make sure that it properly prepares myself and my students. One of the most common feedback that I get is that our morning prep is the most extensive most of my students have ever seen. And I do that because when I first began educating almost 10 years ago, I knew right away that I would be wasting my own time if I did anything besides a morning routine, a morning prep, and a lunchtime review and an afternoon review. I wanted to do it just like a professional trader would. I remember 12 years ago when I first began trading, I remember it like it was yesterday. I would have paid $1 million for somebody to tell me exactly what to do first, what to do last, what the most important thing was on the list that day, right? How important is that, knowing what's coming down the pipe today? So I've been doing this for a long time. My morning prep gets better every time. We post that morning prep as of midnight Eastern Time, and then it shows up on the blog at about 7 a.m. Eastern Time the following day. So head over to the blog, Sideways Markets, check out the morning prep section, and while you're here, check out the live trading event in Vegas. Check out all of our technical indicators. You can learn more about my favorite day trading strategies. You can read a bunch of testimonials from our real students giving us real feedback, etc., etc. There's also somebody standing by here 24 hours a day to answer your questions if you have them. Okay, so first thing we did this morning was we went right into our detailed, formal morning prep, which is every morning at 8 a.m. I'm teaching every single person in our trade room at 8 a.m. how to prepare for their day. And I do it so that you can easily learn it and you can do it on your own in the future. We then opened up our daily price levels. We made some small adjustments because that's going to be needed every once in a while. I'm going to post those daily price levels at 9 p.m. Eastern Time the previous day. That way everybody has the end of the day levels that can be adjusted just a little bit depending on if we rise or fall overnight. Now, this morning we came in, opened up the daily price levels, and you probably are seeing it right here. Big bull wedge. So the price wedge was the first clue we saw this morning, right? Big bullish price wedge. That was easy. What does a bull price wedge tell me to do? It tells me to, price channel, not to be confused with a wedge. A wedge would be a triangle, whereas a channel, right, we have a direction to it, okay? This is a channel. Sorry to confuse you guys. So what does a bull channel tell me to do? A bull channel tells me that buying at the lows is the highest percentage. What about a bear channel? What if this was a bear channel, right? Go in the opposite direction. What would it say then? You got it. Sell the highs, right? Sell the highs. Absolutely. So buy the lows of a bull channel, sell the highs of a bear channel. We also have what we call advanced price structures, and that means we can use Fibonacci to qualify a channel. This is one of the most long-term strategies that I've used, qualifying a channel by using Fibonacci. And you'll notice here, it's going to give us a channel buy zone. So right off the bat here, folks, we know according to our daily price levels, according to our anchor charts. Now, I had a question come in last night. Why did I move to time-based anchor charts? Come in and join me in our private trading event. Join the trial, or come in and see us in the trade room as an advanced member, and I'll explain to you every reasoning behind why I'm using a minute chart here for an anchor chart. I definitely have a specific reason why I'm using a minute chart for an anchor chart. And I'll give you a hint. The wisdom of crowds. The wisdom of crowds. Now, this anchor chart told us, get ready for the long-term high percentage trades will be bullish, right? We'll be buying. We're going to buy the lows of this channel. So that was the first clue we saw. The next clue we saw came when we looked a little bit closer at this. What do you see here, folks? I see we have a level of 88.64 that's been tested. Now, this level of 88.64, this is a trigger zone. What's the difference between a sell zone, as you can see up top here at 89.22? Is there a difference between a sell zone of 89.22 and a buy zone of 87.41? Yes. The green buy zones are considered demand, whereas the red sell zones are considered supply. Very big difference there. Well, then, if that's the case for the buy and sell zones, what are the trigger zones? Well, the trigger zones are Fibonacci calculations. We'll teach you these and we'll give you templates as a member. The trigger zones are Fibonacci-based calculations that are simply support and resistance. Guys, what is support and resistance? It's where traders are expected to react. So that means that not every time we test a trigger zone will it even hold, right? Not every time it will. That's why you won't see me using Fibonacci on anchor charts for entries very often. It's got to be lined up with a buy or a sell zone. Again, I make this so easy for our members because all you have to do is find the direction. Are we leaving out of a buy zone? What do you think? Channel buy zone? Yeah, absolutely. Bull channel says we're going higher. But the problem with this was that we needed to make sure that 88.84 to 88.64 wasn't going to be a reaction level. Okay, so in other words, we were looking to get long because that's where the highest percentage trade was supposed to be because of this bull channel. And we did end up getting long before the end of the morning session this morning. But what in reality happened was we found ourselves testing a trigger zone. This told us that in the short term, we were expecting to see a little bit of a move lower. Meanwhile, be ready for the failure because the longer term trade is going to be right back to the upside. That was the plan this morning. And again, we used a combination of a very detailed morning prep along with our daily price levels. In this case, it's a 60-minute chart. This is an anchor chart. This same chart was included in your documentation last night in your trial, beginner, intermediate, or advanced courses. Everybody has access to them. So no excuses each morning when we come in. We did a little bit of dress up work on the chart, make sure we had everything correct here since things did move around overnight. And now we're looking at a short-term, right? Short-term pullback, long-term move higher. Now, let's take a look at a live chart and let's see what actually happened today. Don't cheat, don't cheat, don't cheat. Okay, here's where we came in. We came out the gate today at 8 o'clock this morning, and this is what we saw. The first thing that I always do, again, this is all included in our detailed morning prep. The first thing I did today was we found the London trading session. The London trading session is really easy. It's between 3 a.m. Eastern Time and 7 a.m. Eastern Time. Piece of cake. Then we noticed that at 8 o'clock Eastern Time, that's when I open up my live trade room. That's when you'll come in. We'll do our prep. At 8 a.m. Eastern Time, we immediately noticed a significant trade setup. And you'll notice this trade setup worked perfectly with our anchor chart trigger zone. Remember that level? What was it again? It was 88.64. Again, 88.64. This was what every single one of our members in the live trade room or anybody who was using those advanced price structures were able to use. Where's 88.64? 88.64 is right there. Right? So 88.64 is right at, you guessed it, the London session highs. Coincidence? I don't think so. Now what happens? Well, we break through London highs and we collapse. Now remind me, folks, what did the anchor chart prep tell us? The anchor chart prep told us to expect a short-term pullback moving lower, followed by a longer-term move going higher. Okay, longer-term move going higher. So here we are now getting exactly what we thought was probably going to be the case this morning. Now all we had to do was find the entry. We used the anchor chart to tell us what was likely to occur. We then have a specific trade setup, which we call the inside-out setup. The inside-out setup can be used in a number of different ways. The favorite spots that I use the inside-out setup are obviously here for the London session, the London highs or lows, the previous high of day or previous low of day, or the previous highs of lows or highs of days and lows of days. Again, come out and join me either on your free trial or in our live trade room, and I'll explain to you exactly how I use the inside-out trade setup. Okay, it's just like it sounds, except backwards. The inside-out setup says we're going to break outside, fail, and come back down inside. And you can see that's exactly what happened. So now we know our standard fake-out breakout of the London session highs is working like a charm. It's an inside-out setup. It's confirmed along with the anchor chart. Now all I need to do is find the entry. Now, where would my target be on this, guys? Where do you think my profit target would be for this type of trade? My profit target is going to be all the way back down to the London session lows. So that was my profit target, London session lows. We're now going to find specific entries using the entry trigger indicator. And then what's going to happen is something we haven't seen very often at all. We're not going to make it all the way down to the London session lows. Guys, it's been weeks since this hasn't worked, the 100% through. Okay, if you've watched these recaps the past few weeks, you've seen almost every day we're able to go from top to bottom. Nice, easy strategy. Well, now what happens is that I'm using my entry trigger indicator to get into positions. So let's now open up the entry trigger indicator. This is going to be the faster time frame. Now this is a tick chart. There's a reason why I like to use tick charts as well. Come out and join me in the free trial. I'll tell you all about what chart time frames that I use, or come on in and join us as a beginner, intermediate, or advanced, and that'll be in your course materials. Okay, so here's that fake out breakout. Now you'll notice this is the same exact chart. It's just this is a tick chart now. Same market, same London session highs and lows. You can see same buy zone and sell zone on the chart. Very easy to see. This is the same exact chart. Now, folks, remind me, how do we use the entry trigger indicator? First things first, find direction. Once we find direction, I want to then look for entry signals that occur after we've changed from bullish to bearish. See, this entry trigger indicator is pretty darn smart. It knows that in order for me to give a sell signal, it needs to have lower lows, it needs to have a pullback or a retracement, and it needs to be a deep enough pullback or retracement, but not too deep. See, most traders know, maybe you don't, but you should, most traders know that selling retracements and buying pullbacks are by far the most efficient and the most consistent way to enter both long or short. So what I use is, again, and I share this with everybody in the room, everybody watches as I do this. I'm not just calling trades, I'm teaching you while I call these trades. Most important thing is this. We're going to wait for the direction to change. The anchor chart's already told me, Joe, we're looking for a short-term move lower, long-term move higher. Once we see the reversal at that highs, then we're going to start looking for the entry. I see the change from bullish to bearish. You'll notice there's a little circle there. On the green shading, we're bullish. The red shading, we're bearish. Really easy, right? When it's shaded green, we're looking for green arrows. When it's shaded red, we're looking for red arrows. Then what I'm going to do is I'm going to wait. New lower low, entry signal, entry short 1. New lower low. Now you'll notice this one gave us 2 entry signals, but I'm going to use the one that happens in the Fibonacci level, right? These are Fibonacci retracement levels, these red boxes here. Again, I'm going to teach you guys exactly how to use these. They're very, very easy. So as you can see here, one way to do it is just to get short. But when you just hit the sell button, you've got to have a really wide stop. So what I'm going to teach you as a student of mine is how to use a combination of the long-term direction, which we knew now was moving lower. Then, once we know where that direction is, I'm then going to use a combination of the entry trigger indicator, which again tells me that I've got to be going the direction of the trend. I've got to have a lower low. I need to then get a retracement. Not every signal is the signals that you want, though. I'm going to use a simple Fibonacci calculation to tell me which ones to take and which ones to avoid. Now, we were able to get a bunch of easy entry signals on the way down. And if you'd like to see the exact trades that I took, including my totals for today, members, if you're an advanced member, I recorded the entire session today, and you can log right into your advanced course, and you can watch that anytime you want. Okay, I've also put snippets of it in your free trial. So we do a recap in the trial and recap in the advanced course materials. Obviously, if you're an advanced member, don't waste your time on the trial information because we don't give all the details in the trial stuff. But I do recap the entire day. So check out the trial section if you want to know all the nitty-gritty details of the trades we took today. And again, the advanced members, you guys get it all. You guys get the nitty-gritty details of the trades as well as all the specific Fibonacci's that we used, and it's a much more extensive review. Now, this is something that we don't see every day. I was planning on what? I was planning on taking my profit all the way down at the lows. And you can see here, we almost made it. Almost made it. But just like we always say, right? Close enough only counts in horseshoes and hand grenades. So I wasn't able to realize as much profit as I would have liked to on that short trade. We then began to move into 9:30. And this is where things really started getting weird because, again, what normally happens is price will move from overbought to oversold. It'll move from supply to demand, from highs to lows, especially when we get that fake out breakout. So this whole time between 9 and 9:45 this morning, we were still thinking, okay, this is still going to go lower. So what I was doing was I was sitting on hands, along with most of the rest of the members in the room today, sitting on hands because at this point, I'm already bounced out of my position short, made some money on it, but I'm expecting it's going to want to go lower and test. But the reality is trying to get into the short now, I've missed it, right? I've already missed that move lower. So now it's time to sit on hands. But then we start to go into 10 o'clock news, and we couldn't tell who was in charge. All of a sudden, the moving averages flatten out. You can see we're right in the middle of the London session now. Guys, we always want to sell the highs of the session and buy the lows of the session. We don't want to trade in the middle. So at this point, as much as we don't like to do this, we had to take those hands and sit on them. We sit on those hands. We really lost all confidence in who was in control because we didn't make the complete move all the way back to the downside. We knew that because it was a little bit sloppy price action, we know how this works. We know that at any moment here, crude oil, because it was so sloppy between 9 and 11 o'clock, we knew that at any moment it could just drop. Right? We've seen that 100 times before, where it hasn't successfully tested or it hasn't completed its full move yet. And for some reason, there's something out there, maybe the 9 o'clock news, maybe the locals were buying at the open, right? Whatever the case may be, this confused us just a little bit. Doesn't happen every day. We usually figure this out pretty well, and usually it does exactly what it should do. You're going to see what happens, though. We're going to go through 10 o'clock. Now, after 10 o'clock, guys, this is when we see the reversal. 10:30 a.m., write that down, 10:30 a.m. Eastern Time. This is when you're ripe for the reversal. So even now, we're thinking, okay, we still don't have, and, looking at it, no new higher highs, no new lower lows. We're not getting any strong confirmation who's in charge. But then we get a big clue. Then we get a break above the London highs, right? This is the London highs. Now, whenever we break back out above this range now, what does that tell me, folks? That tells me these buyers have rejected that lower price, and they're taking it higher. So now the fake out breakout is now completely failed. Now the inside out setup has failed. We did make some money on the trade, but clearly it didn't fully capitalize on the move. And here was a great example of how I always like to use time-based charts. I always get that question, Joe, why do you use ticks, time? Why do you use different types of charts? Well, time-based charts are the best for understanding what's really going on. And I want you to take a look at what happens here. Look at what happens here, guys, when we break above this London high for the first time. When we break above the London high for the first time, we collapse right back down in. What do you see there, guys? Look at that candle right here. Right? Now, again, eventually we're going to break through, but what do you notice? What's the difference between this candlestick right here and this candlestick on the right? The close of the candle. That's the most important clue. So we see that we poked our head right above London's highs, but again, a tick chart's not going to show you this. Okay, ever learned about market profile? Market profile is discussed in our beginner's membership course. One of the things that market profile teaches you, okay, market profile uses TPO, time and price. Time and price. In other words, the amount of time that we spend at a certain price has value. In fact, if you've ever read any of the books by Steve Nissen, right, the Beyond Candlesticks, would highly recommend it. If you're an advanced member of mine, I have a copy of that ebook. It's available for download in your advanced course. But we learn right away as new members that time bars are very wise. Time-based candlesticks include the variable of time, and time is very valuable. Now, time is valuable, but so are price patterns, and that's why you'll see me use charts such as Renko charts, range charts, or tick charts. So I always like to have a time chart available, and I really like to use the 5-minute chart. The 5-minute time chart, in my humble opinion, allows me to see the whole entire day without having to jam it all together like it would be for a 1-minute chart or a 144 tick chart. So a time-based and specifically a 5-minute chart is one of my favorites for being able to see the whole picture, but also I can see the wisdom coming from those candlesticks. Come out and join me as part of your free trial, I'll invite you to a private trading session with me, and I'll explain to you exactly why and how I use these time-based charts. Okay, a little bit tricky at first to understand, but I'll show you an easy way. I've got a couple tricks up my sleeve to help you learn it. So now, here we are now. Now we didn't move all the way to the low, and now we're expecting here, again, once we get through that slop and chop, we make a little fake out breakout above London's highs. Again, at this point now, we really didn't have any market personality. The market personality today between 9 o'clock and 11 o'clock was, I don't want to say horrible, but it definitely didn't give us much confidence. The buyers were in charge. One of the first things I'm going to teach you as a new student of mine is the very most important thing is know who's in charge. If you can't tell who's in charge, how can you trade in their direction? So now the next candlestick that goes above the 11 o'clock, now this one doesn't, right? It closes well above London's highs. That tells me now that I failed to move lower, right? We failed to move lower. We had to make it through some slop and chop here around the news, get through the open, get through the news. And then once we saw that big, bold candlestick on the 5-minute chart, we now knew it's time to begin to look for another entry. Now, you might be saying, Joe, that's right. You said that the short term would be a little pullback lower. But the longer term, because of that bold channel, remember this? Now you're seeing the value of our morning prep. Now this makes a lot of sense. Now we look at this and we say, aha, I gotcha. We took the short trade going lower. That was the short-term move lower, just as we discussed in the morning prep. Now we're seeing those buyers take off with it. Now it's time to get back to the buy side. So we're selling short, short, short on the way down. I got stopped out before getting my full realized profit on the way down. I did take about 50 ticks out of it on the way down. Definitely not as much as I would have liked to. Had to wait through 11 o'clock, and then you're going to see here now, we're going to start getting more entry opportunities here as we go through. Okay, so here's the dead zone, 10:30. We poke our head above the London highs. We can't hold it above London highs. We come tumbling right back in. Very, very sloppy price action here all the way through 11 o'clock. And then here you're going to see, here's that big, huge candlestick. Now, of course, this is a tick chart, so you're not going to see that big, huge candlestick that we saw on the 5-minute, but that's where it'll be, right? That's where that big 5-minute candle comes in. It closes above London's highs. Now we know exactly what we're looking for. We go back to the anchor chart, and on the anchor chart, what was that next sell zone? 89.22. 89.22. Again, I'm not making these levels up, guys. We had them there the whole time. There's my 89.22. Sell zone automatically populates onto my faster time frame. That's where my target now is going to be for the buying trades now, the long trades going forward. Now remember, once I know direction, all I have to do now is wait for the signal. There's signal number 1. Signal number 2. Again, I'm using Fibonacci to qualify the signals. New higher highs, pulls back. Signal number 3. New higher highs, pulls back. Signal number 4. And there's your final target at the 89.22. Guys, this is not rocket science, as I always say. It's day trading. And if you can follow a recipe to bake a birthday cake, you can make money with this trading methodology. I make it very, very easy for all of my students to come in every day and learn with me while you're earning with me. Today, we made some great profits selling short, just like we looked at on the anchor chart. Didn't get as much out of it as I wanted to. We had to wait through some slop and chop, and then again, we broke and stayed above London highs. Again, look at how accurate the buy and sell zones are. Look at how accurate the buy and sell zones are. we knew going into it that we had a buy zone below us, resistance above us. That caused us to look for a short-term pullback. We got it, then blew right on through. 89.22 was my runner target for the buys. And again, these levels are posted every evening at 9 p.m. Eastern time for every single membership type, every single membership level we have. Once we knew the direction, we waited for the proper entry signal. The entry signals are so easy to use, guys. Can you listen? If you can listen in the trade room, you're going to hear me say we're looking for an entry signal long. Can you see that big green arrow? Absolutely you can. Easy to follow. That means shadow trading is as easy as ever. Guys, I built this system so that you can shadow trade this system while you're learning. My job is to teach you to fish. That way, you can fish for a lifetime to come. But along the way, I'm going to be here every step of the way to make sure that you're picking the right rod and reel, the right lake to go fishing in, and then you're able to haul those fish onto the dock. Guys, before I let you go, I want to remind you here that on our blog is a link for our next Vegas summit. Every quarter, we do a live trading event in Las Vegas. This is going to be Memorial Day weekend. Check out the blog and check out the live trading event in Las Vegas. We've got 7 spots left right now. Advanced members, you guys get half off. Beginner members, you guys get 10% off. Intermediates, you guys get a 25% discount. Guys, this is going to be a great opportunity for every single member of mine to come out, trade with me right side by side. We got some great trading giveaways going to be there, live licenses, trading computers, and we're going to have our own little trade-off like we always do. I want to thank you guys so much for coming in and joining me here today. Don't forget, if you haven't registered for our free trial yet, what are you waiting for? And if you're a member of the free trial, guys, I've shown you time and time again this method makes money. I'm excited to share with you this methodology and all of our success, whether it be with a beginner, intermediate, or advanced membership. Thank you so much, guys and gals, for coming out and seeing me here. We'll see you next time for the lunchtime recap and the trade of the day.